Good morning, guys. Welcome to this Wednesday, March 5th. And okay, so we had a pretty good rally yesterday. Actually, pretty spectacular if you look at how they reversed the whole freaking day and then some, and then squeezed it to the upside. But then, of course, late, last half hour, last 15 minutes, we got that retracement all the way from the 75 right down here to the 20s. It's almost 50-point retracement, 75 to 25. Yeah, it was 50-point retracement on the ES. Yes, in the last part. You saw how they absolutely collapsed. I tried to take that Nasdaq trade. I was a little bit early on it and it didn't work out. But man, you can almost smell it. A day like this, when it squeezes up like that, just waiting for that little last burst to the downside, that little fail when the bulls stop pushing to the upside, and yeah, the whole thing just free falls right back again. So far, they did not take it too far though. And they ran it down a bit, but not quite into the territory where I thought they was going to absolutely fall out of bed in the overnight. So far, no, the overnight has been holding on pretty good. A little bit of weakness now, but we'll see. I mean, they had a speech yesterday. They were laying out a bunch of stuff, agenda items, and so on and so forth. We'll see if that have any impact on today's trading. It's all about the tariffs still, tariffs and. Yeah, well, primarily tariffs, I think, is what's driving this right now. Um, at this point, let me see, news-wise this morning, I checked the mortgage apps. That was crazy, guys. If you see those numbers, the composite refinance numbers like 20% up, 37% up on the refinance rate. So I guess the this little sell-off here, the yields and the flight to safety on the bonds has knocked down the 10-year and the mortgage rates, because that was a massive increase, like 30% higher on refinance. That's pretty crazy. So definitely looks like there's some activity on that side. Then at 8:15 we get the ADP report, employment report. At 9:45 we get PMI composite. 10 o'clock we get factory orders and ISM services. 10:30 we get an oil report. So we have news sprinkled out all morning here. Remember, the big news I think is going to come on Friday, employment situation. It is the first Friday of the month, so employment situation comes up. But so we have a fair amount of news to contend with this morning. So we'll see how that shakes out. At this point, though, we're looking at the capital flow. Not quite in a recovery. We still extended to the downside yesterday. So we're still in the move out of the middle to the downside. Let's see if you're going to get the little pause day then. If you can get a day where we don't extend to the downside, we may have a shot at entering stage 2 and maybe even see a little bit of retracement. So then the question becomes, are they going to turn into something which tries to rally to the upside, or are we going to see this further pushes to the downside? So we are around here, that key area, the 5730s. That low volume area is going to be pretty darn important. That comes out, I think this sell-off could be even gnarlier. So, and I think it's going to hinge a little bit on how this thing shakes out, because they had the tariff threats come out, and we'll see if that turns into something prolonged, or if it just if some of this stuff shakes out pretty quick. I think the Mexico Canada tariffs are probably more likely to come off. Then you have the reciprocal thought kicking in April. That's going to be the next leg, because that's going to be across the board for everyone. So we'll see. That could have raised tariffs against different countries, depending on what they're doing. Now, the end result, as you know, is not just raise tariffs. The end result is for the tariffs to calm down, right? So if the other countries drop their barriers, then our tariffs comes down as well, and then there is lower prices. So it's a interesting dynamic going on there. But the market's initial reaction is freakouts as usual. So I think it is a little bit overdone, and I'm waiting for them to kind of figure out that there's some of these stocks that are bargains right now, and they should be probably start picking them up. So it maybe what happened yesterday though as well. This nice rally, some bargain hunting going on there. So I'm going to start off range bound at this point. Slight bias to the downside. We're still pointed lower. So looking to sell strength at this point. 58.20s, 58.35s, 45s, 60s for rotations back down. The last one would be the 75s. And that would be pretty much retracing yesterday's move. So the 35 and 45s here, they were the initial areas we keyed in on yesterday. So far, and you can see here, they start trading above these areas. What that would be up to this level right here. This have an attractor area from that prior distribution. This was a support area, support area, support area, support area. So at this point, now they're going to be resistance on the way up. But at this point, they bounce against that one and then bounce and then pull back. If they can get up above that, I think we may have a shot at trading higher. So, but initially, I'm going to be looking at selling up to that reverse retest and then see if they can take it out or not. So looking to sell early strength. If they take out these first areas of resistance, the 35s and the 45s, I may look for a long trade to run it up to the 60s or the 80s. Just don't buy into resistance. That's the only thing with that, because yeah, this is a pretty good range. So they can be a couple of long trades in here, pretty good ones at that, running it up between levels. The only key things, and first they have to take out the 35s and the 45s, a little bit of volume, then avoid selling or buying into the 60s and right into the 75s. But as they take out the 45 to 50s, excuse me, they may have a pretty good move to the upside to the 60s, and after 60s, a pretty good move up here to the 75s. And above 75s, I would actually lean in on the long side at that point. I think that could be a pretty good move to the upside at that point. And that would be taking out this area of resistance. So this whole area of congestion, resistance. So it's support on the way down. Now when they're taking it out, I would be looking for a reverse retest against it. And if they can't take it out there, I mean, they're going to probably stay in that lower range. Maybe even see another test of that 57.30 level. So that's the way I'm looking at it. On the way down, I'm going to be a lot less aggressive buying weakness. Initially, we have a couple of ledges here, the 58.10s and the 57.95s, down to that mode at the 57.90s. Those are the things I would consider for a buying opportunity. That would pretty much be consistent with a range-bound market. So if they're not going to move down, it's just going to be more of a range-bound day. Buying against these support areas could potentially be a good setup. Below that 57.90s, I think we're looking at a test of the 30s again. So I think that opens it up to the downside. But those are the only thing I would consider for a buying opportunity, at least to get started. Then, of course, there could be an opportunity against the 70s and the 60s down here towards the lower end of the range. I just going to be a lot less aggressive about them. So as they start taking this lower, these three support areas, a retest of that 35 and 45 area. If that happens, that would be a potential buying opportunity. But on the way down, I would probably be on the short side of this, right? But I would stay on the short side of this. So if they start taking out that 90s, stay on the short side until you get down to that 35, 45 support area. That's where you probably find the best support again. All right, so that's how we get started. Still, capital flow is pointed lower. Exchange member chart is pointed lower. Starting off is pointing this to the downside, looking to sell strength. At this point, given that they are to the downside here, looking to sell against the 58.10s, 58.20s, 35s, 45s initially. And then if they take out that 45s, there could be a long trade running it up to the 60s and the 75s. That's going to be a little bit less aggressive on those shorts, waiting, or being patient to wait for them, pretty much, the way I would look at it. So let me see, I guess ADP came out. This thing started moving a little bit. So that's how we get started. But I would, as I said, bias is still to the downside, given that we still has extended yesterday to the downside pretty good. If we get a nice range-bound day today, that could probably start the process of entering a stage 3 on the profile. Right now, we just got the ADP report on 77K. What was the expectation on that? I don't know. We'll see. Looking at my number here. So the ADP I had was consensus was 162. All right, so it's much lower than expected. All right, so that could be a positive for the market then, if in a sell mode. So that's how we get started on the ES. Looking to sell strength for rotations back down, and let's see if they don't extend to the downside today. Then we may have a shot at potentially entering that stage 2 and potentially coming to balance somewhere somewhere around here. Now, where they're going to come to balance, anyone's guess really, but I would probably expect it to be a little bit higher. I would expect it to be the spots I would be looking for is this area right here around the 58.70s. It's kind of what I would expect them to come to balance, but it doesn't necessarily need to be. They have a little bit of volume down here at the 57.60s as well. Could potentially be their spot. But that's what the whole market or price, the auction process, or the way the profile works is all about. So you cut off the selling at one point, you retrace, you cut off the buying, you come to balance, you go back and forth, and you start finding a spot where they building value. So that's how you determine it. But at this point, it's we're still pointed lower. All right, so that was a lot on the ES, but it covers a lot as well. It's a pretty good. Where do you have it? There you go. ES is a pretty big part of it. NASDAQ and the bond market pulled back pretty good yesterday, and I've been to the downside. So they are flight to safety the other day. It was well off the charts to the upside. Yesterday, you got a nice move to the downside. Ahead of that little rally too. So that was not a bad move at all. They kind of risk off kind of thing for a bit there, and now they're holding this range around the 117.20s. So on the bonds, let me capital flow on the bonds. Where are you? There you are. So capital flow on the bonds backing off. You see they start taking this all the way up here. Now they're right back here to this value area again, a high volume area. So a little probe to the upside, right back down again. And let's see if we get further selling on the bonds, that could precede a nice little rally. It could be a positive for the market. So at this point, the yields came down pretty good, and a lot of refinancing activity going on. We'll see. Bond prices start heading lower again. That means the yield starts coming back up again. So I would trade the bonds range bound. I would probably look for a range bound market on the bonds. They are back at the attractor area, and unless they start taking out this lower edge, the 14 to 16, I would probably be staying range bound on this guy. Looking to buy against the 20s and the 13, 14s. They're going to get short against 1801s, 18.6 to 7s for rotations back down. Maybe up to the 1810s here. But a pretty tight range to get started. Let's see if they're going to move lower or if they're going to just start retracing right back up again. So that's the bond market. Let me see. Let's just double check that. Yeah, the 1806 and the 1810.11. So they start taking out that 1011. I think they're probably heading back up again at that point. But this is a high volume area, so I would probably expect them to stick around there. And let's see if they keep selling. If you start seeing some weakness on the bonds, that could certainly precede a nice little move to the upside on the on the indices. NASDAQ looking pretty weak this morning. The ES took a little step to the downside now on the ADP number. So NASDAQ is all over the place, massively volatile. Kind of step away from that one for a bit and try to wait for it to calm down before you try to get into on any trades. It's so volatile. You end up with big trades just to be able to trade it in a normal fashion. So at this point, they've been all the way down here testing that lower edge, bouncing back up again. And on the NASDAQ, it's as you can see, we are kind of at this attractor area, and they're trading right now a little bit above it. But I would expect them, they're still pointed lower. They extended yesterday. So looking to sell strength again for rotations back down. And this whole area above us are the congestion area. So this is going to pretty much start here at the 720s up to the 2800s and 900s is the general area here. But Used to be pretty good support on the way down when they really sold off. Now they've blown through that one. So we are in some different territory here on the Nasdaq, and they can certainly retest this low, the 20,000, maybe even take it lower. You never know, right? We've been due for a big good correction right now, and that's definitely feels like we are in that correction mode right now. And tariffs, yeah, great excuse to do it, right? Great excuse to market freaking out, everyone's risk off. Sets up great opportunity to get to buy those high flying stocks which you've been wanting to buy but didn't want to chase. Now this is the time. So starting off looking for short opportunities against the 520s, 560s, 590s, 630s, up to that 680s for rotations back down. If they start taking out the session highs, the 630s, I would look for long opportunities to run it higher. Yes, it keeps snapping back on me. So I would be looking for opportunities, but if they this area of resistance, the 630, if that comes out, looking for moves to the upside. Still looking for shorts against the 670s and the 730s for rotations back down again. Just a little bit less aggressively. So, and if they for some reason can get up above this 730, I mean, actually it had to pretty much be that 780s. If that comes out on the upside, they start trading above that. I think Nasdaq could start leading us back up again. So we'll see. At one point, this whole thing shifts, and it shifts violently, and it's like, yeah, sentiment change. We are buying again, risk on, and then you see a day like we saw yesterday, but to the upside instead. So at this point, though, we're not quite there yet. Too many cross currents, and we have few things coming out. We got the current tariffs in place. But we also have the early April 2nd reciprocal tariffs coming out, and that's also going to be a potential market event. And then you'll see the fallout. That's when stuff like that starts showing up in the numbers. Things may go up in price, stuff like that may be happening. So we'll see how the market reacts to that. But starting off from the short side, looking to sell strength. On the way down, looking to buy against the 450s, pretty much just the 450s. Below that one, I would just stay on the short side on Nasdaq because they're pretty much right down there again. So on the Nasdaq, a little bit more aggressive on the short side than on the ES. So looking to buy against 450s, maybe down to that mode at the 400s, but that's about it. Below that one, just stay on the short side of this. So that's the Nasdaq to get started. Finally, looking at oil and gold. So oil and gold. Gold is right up here against the, let's see, get my capital flow on gold real quick. There it is. So they're right in the middle of this range. So they're backed off. They were down in testing that 880, 870, 880 support area. Now they're right back up again and trading pretty much in the middle of this range. So I would start off range bound on gold. I would look to sell strength up to the 2970s. Looking to buy weakness all the way down to the 2870s. Actually all the way down to the 2850s. I think the 2870, 75 here is a good starting point, but you can see how this volume really starts kicking off down here at the 2850s below that level. So there's a big area of volume on the longer term chart, but I think the narrower range is right up here against the in the last distribution from late January. So this guy here, the lower end, so this going to be 2880s up to the 2970s. Now trading smack in the middle of that range. So I would just start off looking to sell strength, 2930s, 38s up to the 49s. Looking to buy weakness, 22s and 18s, 10 to 11s, down to that 2905s. Just trading that range to get started. If they start trading below 2905, starts trading above the 2950s, well, and at that point, you're probably going to see a test of the outer edge at that point. But that's kind of how it gets started. Pretty much range bound trading on gold at this point. Let's see if they're going to be any kind of direction on it, but looks like they're coming to balance in that distribution there. And then finally, oil to the downside. They're down here against the 67s. Looks to me like they're getting ready to bust through 67. And if they do that, guys, then we are going to this move to the downside is going to begin. It could be a probe, but chances are we may see a start of this move to the downside on energy prices. And as they come down, inflation pressures and all that stuff, the cost of everything which is moved around with energy or diesel fuel is going to start coming down. So I would stay on the short side of oil. Still be mindful that this is a lower edge. They haven't quite busted through it yet, and they could still hold and trade right back up here to the 69s. So watching it. If they start taking out this lower support area, now the 67.15s and the 66.80s, this is it. And start trading below this. I would stay on the short side of oil. See if they can get a nice down day trading this into new territory. So looking to sell strength, 67.15s, 67.50s, 68s for rotations back down. Above 68, I would be let's go back range bound and look for retracement back here to 60 for a little bit of higher prices. But that's kind of how we're going to trade oil, at least approach oil today. So watching that could set up a nice move to the downside, all right? And that's one you want to be part of if it happens. All right, so that's oil and gold. Back to the ES. And let's see if something has changed on that. Still probe down here to the mode, 57.90s, and that will be the last one to look to buy against. Below that one, I think they're heading lower, so we'll see. Weak overnight looks like. The ADP number was kind of on the weak side, so I guess bad news is bad news right now. So it's not, it doesn't look like it's a positive reaction to that lower number. So anyway, so that's how we get started. Looks like they're starting to take this lower. So we'll see. Maybe get another, if they extend to the downside, we'll still to the downside and take out these lows. The 57.45s, if they take out that low, it's still in stage one, still moving lower. So we'll see how this whole thing shakes out. But at this point, stay on the short side. Look to sell strength for rotations back down again. All right, I'll leave it there, guys. So good trading. A little bit long-winded today, but good trading. And we'll see you back at 11:30 for the next update. All right, guys, later.